Welcome to TheoTrade. This is Corey Rosenblum, and it's May 17th, 2018, and you are watching the Theo Night video. I wanted to bring you a little update on the equity markets, what we're looking for the next couple of trading sessions in our consolidation. Take a look at the big picture there. Take a look at individual stocks, particularly our FANGs, our Facebook, Apple, Amazon, and then we'll take a look finally at the commodity point of view for money flow. But let's get started with what happened today and what we're looking for in the next series of trading days this week, and Friday coming up tomorrow. All right, we are in a consolidation triangle, really a little range spot in all markets here. The S&P is forming its range contraction at 2720. The Dow mini futures are in a 200-point range between 24.6 and about 24.8. Just shy of the 25,000 marker. It's the Nasdaq that we're watching because it is at 6,900 and a little range beneath its recent high at 7,000. But the market that's given us lots of interest is the Russell futures, and the Russell index made new all-time highs. Sneaking up on us here, but there is the small cap index at new highs. The general thought process for the future is that we are planning our game plan in terms of volatility and direction. When the market goes range contraction or sideways, you can see here, it typically leads to a range expansion event. The range expansion or trending action that we saw over the last few sessions last week is now giving way to an expected range contraction. That means neither side has the edge. Neither side, bulls or bears, is winning. And so the next play will be a departure from these range boundaries. Typically, it is best to wait for one side of the market to win the battle and for the other side to exit via their stop losses. And that creates an emotional movement where traders are losing on one side and winning on the other. But until that happens, we typically do get this back and forth behavior. It leads to intraday range days and not a lot of opportunities for swing or very aggressive intraday trades. And that's where we are in all of our markets. Let's take a look first at the volume profile, our key pivot levels and expectations for the S&P futures. The point of control. Now, what's the point of control? It's the spot where the most volume at a price particular level has transacted, and it's just beneath 2720. You can also visualize that as the middle of a rectangle pattern or consolidation between 2740 and just above 2700. So again, triangle formation, volume node, we are looking for a future breakout event. That's easier to predict the volatility than the directionality. The game plan would be to short or to be bearish on a break beneath the 2700 level, and that could lead to a rapid range expansion play down toward our 2680 volume node and marker. We don't necessarily want to predict that, knowing that the alternate thesis or the unexpected move could trigger a rapid bullish short squeeze event above this 2740 level. We'll see that on the daily chart in a moment. But as long as price remains inside this volume node and not entering an open air pocket, not doing range expansion, we will respect the range, respect the boundaries, and trade more cautiously, perhaps, than normal, getting ready for a future breakout event. Let's take a look at the daily chart of the S&P. Again, setting up the plan for the next series of days, which we are looking for an expansionary event or a trending event. But again, expect consolidation until that occurs. Today was a doji. Thursday here, doji, sideways. The market opened, rallied up, went down, and closed where it began. That is a sign of indecision, and it happens to occur inside of a little short-term triangle at major support, 2700. The whole market, the whole of 2018, with the exception maybe of the January rally and the February sell-off, has been a contraction event. I do want to caution you that 2018 particularly has seen traps, tricks in both directions, meaning break under this 200-day moving average and then an immediate rally back, a couple of sessions beneath. One would think that's a bearish breakout, but that took us right back. And the same thing. The same is true to the upside, where there have been traps, so do use more caution than normal in this market. So again, watch your positions closely. We'll take a look at some individual stocks in a moment, but that's the play for the S&P. On the Nasdaq, not that much different, although it is into 7,000. The Nasdaq level, 7,000. Also contracting. You can visualize a trend line here, and it's pushing up with another little rectangle or even a triangle pattern. The main idea is that we are getting consolidation and contraction. Let's take a look at our leading stocks. We'll start with Netflix. Netflix, also keeping the Nasdaq in mind, shows a contraction pattern, and its levels are, zooming in, 320 per share, trend line and the 20-day exponential moving average, and just above 330 per share. What's the play for Netflix here? Again, not a whole lot you can do, and except for playing back and forth in this range until you get a breakout. So look for a range expansion event, would be a bullish short squeeze event. Again, be on guard for a trap. Again, what's a trap? Initial push through an area and a violent reversal down from it. Be on guard for that above 340. Otherwise, 320 is a potential breakdown, bearish play to test out or trade eventually toward 300 per share. And also the main idea is whatever the stock market does, the indices do, the Nasdaq particularly, leading stocks will do as well. So a bullish break in the Nasdaq suggests a bullish future breakout for this and other stocks, and the opposite on a bearish breakdown. A little bit different perspective in Apple, given that it is overextended into 190 per share. Its downside target would be just above 181 per share. So see if that can trade down toward this pivot on a sell swing or a breakout from its consolidation. The alternate thesis, meaning we did not get a pullback, would be a bullish play towards 200 if, and only if, above 190 per share. Similarly, Google is trading down away from its 1,100, so 1,100 resistance pivot. Remember I mentioned the trap scenario. This market in 2018 is more prone to trap outcomes, so be careful there. We're watching 1070 and this 1,100 spot. If Google can stay within the short-term range, you probably look for a downside swing towards 1020. Finally, Amazon looks a little bit similar to Netflix with its triangle between two little compressed zones, two compressed price levels at roughly 1,600. Once again, the theme for tonight and beyond is we are in a contraction environment looking for a breakout. We will not predict the breakout. We will look to join the winning side, being on guard of little traps that trick us, jump us in. So you might want to wait for 1 or 2 bars to close beyond or to trade closely on the intraday frame. Taking a look at commodities. We'll start with the S&P, which again is sideways to rising in terms of its short-term trend. Gold on the hourly chart in comparison is falling. It's having a downtrend in gold on the intraday chart. Contrast that with the uptrend and rising prices in crude oil, and all finish together with bonds, the bond market. This is our 10-year note, ZN. You can also see that in ZB, which is downtrending. So gold and bonds are trading very similarly. We have a positive correlation there. Similarly, a positive correlation in the equity market with crude oil. We'll finish with a quick look at the daily charts of these markets. to get a sense of where the money's flowing. Clearly into crude oil, higher highs, higher lows. It is overextended and could pull back, but nonetheless, this is a continual rising trend. The same is true for Treasury yields. TNX is our Treasury yield. As rates go higher, prices go lower, and this is not necessarily a great sign that oil continues its persistent up rally with Treasury yields also persisting higher. That could, at some point in the future, put pressure on the equity market, but like anything, it doesn't matter until it does. We will keep watching these markets, these levels, these trends, and how it plays into the equity markets. Be safe, take care, have a good night, TheoTrade.